So this is just gold on a raw chart right now, the key levels that you want to have in mind right now. And I'll just go over and also just show this with a few more indicators so you can see exactly what we're looking at as we go into next week's FOMC statement. So if we have a look on a weekly chart, we continue on a weekly closing basis to close back above the 61.8 Fibonacci retracement level. So if you take the highs of the year, go back to the lows of 2015, you'll note where we're sitting right around that level. We continue to breach below 1170, but on a weekly closing basis, close back above it. And it does look like gold at the moment is trying to find its feet. It's treading water right now. It's not got the legs behind it to fully follow through at the moment. It's had a few bounces from around the 1160 zone, and on a weekly closing basis we continue to close above 1170, which is a important zone. It's the 61.8 Fibonacci retracement level, and you want to watch this very carefully as we go into next week. Now, what you could expect if we do see the interest rate hike go ahead next week is we could certainly see a short-term spike in the US dollar, which could cause a flush out again for gold and silver. But you need to bear in mind it could be short-lived. Now, one of the reasons behind this is due to the US dollar last week off the back of non-farm payrolls having a very weak reaction to that. So on strong non-farm payrolls, the US dollar sold off on Friday. In fact, we gapped on the Sunday open, but had quite a large move lower, which is this long candle coming down here. And a lot of our indicators are showing that the US dollar index right now is rolling over. It's been very overbought. And in fact, today we've just had a pop to the upside as well, following on from the ECB extending the QE program at a slower pace. And you can see the US dollar has just popped up. It's come back up to resistance. And what we'll be looking for a similar move actually as we go into next week's FOMC statement, because we are starting to roll over. We're correcting from a very overbought condition with the US dollar. A lot of the moves so far with regard to next week's FOMC statement and the potential for an interest rate hike has already been priced into the US dollar, with it breaking out to 16-year highs recently. Obviously, the Trump election results have caused a significant move on the US dollar, also the stock markets. But you can see we just come right into resistance today. And I would suggest that these moves, these retracements at the moment, could be used as selling opportunities in the short term for the US dollar and taking advantage of a potential low that will form on gold and silver as we go into mid-December and as we go into January and February as well. So our view at the moment is that the US dollar is overbought. It is currently in correction mode. And although we look at this to potentially spike off the back of the FOMC statement next year, the interest rate hike, if you go back to last year where we had a very similar scenario, and we'll go back over to gold, you want to note here where we got this knee-jerk reaction around the FOMC statement where we sold off, but on a weekly closing basis, we closed back up again above the consolidation zones, so essentially above support, going back to this time last year around 1,050 US dollars. And from that point onwards, we of course saw a significant rally over 15% over January and February. And we've got a very similar formation at the moment. You can see gold is trying to find some sort of a base. It's trying to find the bottom at the moment. It's not quite there. It doesn't have the investment demand to drive it higher right now. But you definitely want to have gold on your radar as we go into January, where you can often see a lot of additional inflows into the markets. Fund managers, banks, institutions, they will be looking to position themselves for 2017, and certainly they'll be looking at gold if it's around its current levels being quite undervalued. Now, I know for a fact there are a lot of traders who are looking to pick up a position on gold at the moment if we do dip down to around the 1140 to the 1150 zones. That's worth noting. We might get some sort of spike low here. We could certainly get another washout on gold, take out more stop losses, take out support, but we'll be watching to see how gold reacts on a weekly closing basis. If we were to see a break and a close below the 1140 zone on gold over the month of December, continuing through to January, yes, absolutely. Don't look for a buy, look for a potential continuation and a collapse essentially of gold prices. But right now, we seem to be developing this basing formation where gold is trying to hold on to support, especially on a weekly closing basis. We're closing back above the 61.8 Fibonacci retracement level. And you definitely want to be on this as we go into next week's FOMC statement. It could provide a very good trading opportunity.